Hey everyone, Coach Investor back to our earnings video. I just finished filming the Roku one, so if you want to check that out, it's going to be in the top right corner. But in this video, let's focus on probably one of my best bets, best ideas, let's say, for the next couple of years. It's no secret. I've been covering this a lot on this channel lately, and that's Amazon. Everybody was expecting a huge miss because, well, we all know that retail isn't doing very well, and for Amazon's standpoint, they also take a hit on that Rivian investment that was also known, but the numbers were better than expected and outlook as well. So let's have a look at that. At the time of making this video, the stock is up 12%, unlike the likes of Intel or Roku, where it's down from 10 to 25% or so. So for me, one win, two losses, I'll take it. But before we jump into this report, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and do check out all the other links down in the pinned comment, some of which might actually save you some money. I would also appreciate a thumbs up, and if you haven't subscribed to this channel, maybe hit that subscribe button. All right, let's jump into this report. All right, so obviously operating cash flow, free cash flow, less principal repayments, etc. are all down. This is no secret. We've known this for a while. So operating cash flow decreased 40% to $35.6 billion in the last 12 months, compared to close to $60 billion last year. Same thing for free cash flow, that decreased to an outflow of $23.5 billion compared to an inflow of $12.1 billion. Now the rest here, the same scenario, but what I do want to talk about is this right here. Net sales increased 7% to $121.2 billion in the second quarter. These numbers are just incredible. Again, these are net sales, profits, not so much. But this is compared to $113.1 billion in the same quarter last year. And again, foreign exchange here, as we said in the past videos, this is going to be heard a lot during this earnings season. So excluding that, so excluding $3.6 billion of an impact, net sales would have increased 10%. So there is that. Operating income decreased to $3.3 billion in the second quarter compared to $7.7 billion in the second quarter last year. Now net loss was $2 billion in this quarter, or 20 cents per diluted share, compared with net income of $7.8 billion or 76 cents in the same quarter last year. Then there is obviously this net loss include a pre-tax valuation loss of $3.9 billion included in non-operating expense from their common stock investment in Rivian. And as we've talked about in the past videos, right, the pressures on fuel, because while your packages need to get delivered, and well, with fuel cost rising, obviously the expense for Amazon rises as well. So a quick quote here from Andy Jassy, the new Amazon CEO. Well, right now, not so new. But he says here, despite continued inflationary pressures in fuel, energy, and transportation costs, we're making progress on the more controllable costs we referenced last quarter, particularly improving the productivity of our fulfillment network. As you remember, because of COVID, they basically, well, overinvested in that segment, and well, some warehouses are basically empty. He then added that they're also seeing revenue accelerate as they continue to make Prime even better for members. I've made a video specifically about that aspect. Prime is a huge moat for Amazon. If you want to check out that video, that will be in the top right corner, and I do suggest you go watch it because it is very important for the Amazon thesis. So they're investing both in faster shipping speeds and adding unique benefits such as free delivery from Grubhub for a year, exclusive access to NFL Thursday night football games, maybe even the Sunday ticket, who knows, and releasing the highly anticipated Garbage series, yes, I added the word garbage, to the Lord of the Rings, Rings of Power. If you've watched the trailer, it's probably the most disliked video on YouTube right now in the past month or two. The first trailer they released earlier this year has around 3 million dislikes. Why? Because it pays zero respect to the original content from Tolkien. Zero. I mean, Sauron looks like Eminem from Wish. But enough of that. So the highlights here, we've talked about the Prime Day, how successful that was. So more than 300 million items sold and saving more than $1.7 billion. Prime members worldwide purchased more than 100,000 items per minute. And some of the best-selling categories were Amazon devices, which, by the way, is probably, well, the Amazon Basics, not Amazon devices, because those include Fire Stick, etc. But Amazon Basics is also going away, which we've talked about in another video. So the most best-selling categories: Amazon devices, consumer electronics, and home. Amazon devices actually had a record-breaking Prime Day, selling more devices than any other Prime Day event. Now I'm going to skip all of this and jump straight into the good stuff. Well, maybe not good stuff, because well, as you can see here, basically the different categories. So North American net sales, yes, increased year over year, but operating expenses increased as well, and that's why operating income is at a loss here. Internationally, same thing. Last year was barely profitable. This year, not at all. Although operating expenses decreased. As for AWS, as always, saves the day. Net sales increased, operating expenses increased 40% or so as well, but operating income increased quite nicely. And now the good stuff. All right, so let's start with online stores. So this time, well, again, it decreased, right? We've seen that quarter after quarter, but there's always a but. Advertising services, much better, right? Quarter over quarter, big increase there. Year over year, it's up 18%. And I mean, that's a big deal, right? Because advertising services increases while online stores sales here decreases, which is a big deal. Now imagine when this number increases. Now we've talked about, we want to see obviously this segment decrease a little bit because most of the things sold there aren't very profitable. And we want the third-party seller services, which increased 9% year over year, and it also increased a little bit quarter over quarter. We want to see that segment increase. And then again, going over subscription services, that's up 10%, advertising up 18%, even if the online store sales are down quarter over quarter and year over year. I mean, the advertising side of Amazon is very much ignored by a lot of people. Again, we've talked about Google yesterday or 2 days ago, and YouTube is much less than this number right here. And then as for AWS, it grew 33% to $19.73 billion. Nice increase there year over year. And again, AWS, nice margins as well. Now a bit lower here is basically where you're gonna see why the company is not that profitable. The main reason is probably fulfillment. That's up 35%. Cost of sales, 46% up. Technology and content, that's up 49%. Sales and marketing, 43%. G&A up 42%. And then total stock-based compensation expense up 45% as well. As for the shipping costs, clearly that's up as well, 9% year over year. But quarter over quarter, it's down, and it's also down from the quarter before that. Now again, okay, shipping costs are down, but could that be because, well, online store sales are down as well? Yes and no, because if you look at the third-party sellers, that's up. Now, one last thing is that's probably also one of the main reasons why the stock is up so much, and that's because of their rosy, let's say, outlook. So net sales are expected to be between $125 to $130 billion, or grow between 13 to 17%. So that's quite nice. This guidance anticipates an unfavorable impact of approximately 390 basis points from, you guessed it, foreign exchange rates. Now, operating income is expected to be between $0 and $3.5 billion, compared to $4.9 billion in the third quarter last year. And this guidance assumes, among other things, that no additional business acquisitions, restructurings, or legal settlements are concluded. So there you have it. That's Amazon. Obviously, there's still a long way to go for this great company to become a bit more profitable, especially at the scale they're at. But This is, in my opinion, a sign that they're going into the right direction, and it's about time. Amazon right now, by the way, is my third largest position. It has overtaken the Trade Desk. The Trade Desk is now my fourth largest position. Second is Square. First is still Tesla. Now, obviously, do share your thoughts on Amazon's quarter down in the comments below. Do you actually hold Amazon? Leave it all down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next video. Bye bye.